Most people think dividends are just extra pocket change, but for some investors, dividend stocks are literally paying the bills every single month. Imagine waking up, checking your account, and seeing cash deposits rolling in whether the stock market is up, down, or crashing. That's the power of monthly dividend investing. And while it sounds like something only rich people can do, the reality is simpler than most people think. Today, we're breaking down 6 monthly dividend stocks that investors use to generate passive income. Some of these companies pay modest but reliable dividends, while others offer extremely high yields that can seriously boost monthly cash flow. We'll also cover what monthly dividend stocks actually are, how to evaluate them properly, the risks you need to understand, and how much money you'd realistically need invested to target around $2,000 per month in passive income. Let's start with the basics. What are monthly dividend stocks? Most companies that pay dividends send those payments every quarter, 4 times a year. But monthly dividend stocks are different. These companies distribute cash to shareholders every single month, making them especially attractive for investors who want consistent income instead of waiting 3 months between payments. Monthly dividends are popular among retirees, passive income investors, and people trying to cover recurring expenses like rent, utilities, or groceries. Another advantage is compounding. When dividends arrive monthly, investors can reinvest that money faster, which can potentially accelerate long-term portfolio growth over time. But not every high-yield stock is a good investment. That's why smart investors focus on 3 important factors before buying any dividend stock. What makes a good monthly dividend stock? First is dividend yield. This tells you how much annual income a stock pays relative to its share price. Higher yields may sound exciting, but extremely high payouts can sometimes signal higher risk. Second is company stability. A strong dividend means very little if the company can't sustain it. Investors usually look for businesses with healthy cash flow, reliable operations, and a history of consistent payments. Third is long-term potential. The best dividend stocks don't just pay income, they also have the ability to grow over time through rising profits, expanding operations, or increasing asset values. With that in mind, let's look at 6 monthly dividend stocks that stand out for income investors. 1. Stag Industrial Dividend. Yield, around 4.2%. Stag Industrial is a real estate investment trust focused on warehouses and industrial properties across the United States. Over the last few years, industrial real estate has exploded in demand thanks to e-commerce growth and supply chain expansion. As online shopping increased, companies needed more warehouse space, distribution centers, and logistics facilities, exactly the type of properties Stag owns. That demand has helped the company maintain strong occupancy rates and growing rental income. Since going public, Stag has steadily expanded its portfolio to hundreds of industrial properties, helping support its long-term dividend growth strategy. For investors looking for a more stable and lower-risk monthly dividend stock, Stag is often considered one of the more reliable options. 2. Realty Income Dividend. Yield, around 5%. Realty Income is probably the most famous monthly dividend stock in the market. In fact, the company literally brands itself as the monthly dividend company. It has paid investors hundreds of consecutive monthly dividends and has increased its payout for decades, earning a reputation as one of the most dependable dividend companies available. The business owns thousands of commercial properties leased to major retail and corporate tenants. Its strategy focuses on generating stable rental income from long-term lease agreements, which helps support predictable dividend payments. For many passive income investors, Realty Income is considered a core holding because of its consistency and long dividend history. 3. Oxford Square Capital. Dividend yield, around 13.5%. Oxford Square Capital operates as a business development company, also known as a BDC. Instead of owning real estate, the company invests in smaller and mid-sized businesses that may not have easy access to traditional bank financing. These companies often have growth potential, which creates opportunities for Oxford Square Capital to generate strong returns. Because of its investment structure, the company offers a significantly higher dividend yield than traditional dividend stocks. However, higher yields also come with higher risk, especially during economic slowdowns. That's why BDCs are usually better suited for investors comfortable with volatility in exchange for larger income potential. 4. Orchid Island Capital Dividend. Yield, around 17%. Orchid Island Capital focuses on residential mortgage-backed securities. In simple terms, the company earns money from pools of home loan investments and distributes much of that income back to shareholders. Mortgage REITs can generate enormous dividend yields during favorable market conditions, which explains why Orchid Island often attracts income-focused investors. But these companies are also highly sensitive to interest rates and market conditions. That means the dividend can fluctuate significantly over time. Still, for investors seeking aggressive passive income opportunities, Orchid Island remains one of the higher-yield monthly dividend stocks available. 5. Armor Residential REIT Dividend. Yield, around 18.5%. Armor Residential REIT invests primarily in government-backed residential mortgage securities. Because these investments are tied to mortgage markets, the company can produce substantial income for shareholders through dividend payouts. Like other REITs, Armor is required to distribute most of its taxable income to investors, which is why the yield appears so high. But again, investors need to remember that high-yield mortgage REITs can be volatile. Stock prices and dividend payments may rise and fall depending on interest rates, housing conditions, and broader economic trends. 6. San Juan Basin Royalty Trust. Dividend yield, around 22%. This is easily the most aggressive stock on the list. San Juan Basin Royalty Trust operates differently from traditional companies. It's tied directly to oil and natural gas production. As energy reserves are extracted and sold, investors receive a portion of the profits through dividend payments. When oil and gas prices are high, payouts can become extremely attractive. But when energy prices fall, income can drop just as quickly. That makes this stock far riskier than something like Realty Income or Stag Industrial. Still, during strong energy markets, royalty trusts like this can generate enormous cash flow for investors willing to accept the volatility. So how much money would you need to earn $2,000 per month? Let's do the math. If we average the dividend yields from these 6 stocks, we get an approximate annual yield of around 13.5%. 24,000 divided by 0.1351 is approximately 177,646. To generate about $24,000 per year, or $2,000 per month, you'd need roughly $177,000 invested based on those average yields. Of course, this is only a simplified example. Real dividend payouts fluctuate, stock prices change, and high-yield investments carry additional risks. But the bigger lesson here is this: dividend investing can create real cash flow over time. For some people, it becomes supplemental income. For others, it eventually replaces part of their paycheck, and the earlier you start building that income stream, the more powerful compounding becomes in the long run. If you enjoyed this video, make sure to subscribe and let me know which dividend stock surprised you the most.